Hi everyone. In this video, I'm going to interview Betsy Mayotte, President of the Institute of Student Loan Advisors. Today, we're speaking about how to consolidate your student loans. Betsy, thanks so much for joining.
Hi.
So, what does it mean to consolidate your student loans?
So as opposed to refinancing, when we talk about consolidating student loans, we're almost always talking about federal student loans. Consolidation, what it means is you take your individual loans, those get paid in full, and you create one new loan that is all of those loans combined. There's only one place to do that. It's through the Department of Education, which is studentaid.gov. It's free to do that. I emphasize that because there's some dirty companies out there that offer to do it for you for a fee, and the process is super easy. And again, it's free. So there's zero reason to pay anyone to do this for you. The interest rate for a consolidated federal student loan is a weighted average of the interest rates of the underlying loans, and then they round up to the nearest eighth of a point. So you can't refinance federal student loans in the sense of getting a lower interest rate. But what it does do is it extends the term, which can lower your payment. So whereas regular student loans have a 10-year repayment term, a federal consolidation will have a term of between 12 and 30 years.
Great. So, when should borrowers consider consolidating their student loans?
So that's a great question, because there's still sort of this myth out there that everybody should consolidate, and that tracks back to the early 2000s when everybody should have consolidated. The reason for that is back then, most federal student loans had variable interest rates. And the only way to, and so the rate would change every year depending on what was going on in the economy. And they could go as high as 12%. Most of them only went up to like 8%, but some could go as high as 12 or 14%. So in the early 2000s, the rates got super low, like the ones and the twos. And consolidation was a way to lock in that low rate. So when you consolidate, they used whatever your rate was at the time. So if your rates were at a 1 or a 2 and you consolidated, that's what your consolidation interest rate was, and it was locked in at that rate. So back then, everyone consolidated, and they should have. The other reason people consolidated back then is it wasn't uncommon to have 4 loans and 4 different servicers, and that's not confusing. So consolidation was also a way to get a single bill. Today, interest rates are fixed. Any loan made after 2006 has a fixed interest rate. So consolidation isn't going to help you there. And the Department of Education has done a pretty good job making sure the whole 4 loans, 4 different servicer thing doesn't happen anymore. So you're going to end up with a single bill anyway. So the only reason to consolidate today is to get access to a program that you might not be eligible for already. For example, if you have older loans from what used to be called the Federal Family Education Loan Program, those loans aren't eligible for things like public service loan forgiveness or most of the income-driven repayment plans. However, if you consolidate them into the direct loan program at studentaid.gov, they become eligible for that. Same with the program called public service loan forgiveness. So someone with those old FFEL loans or even a Perkins loan might want to consolidate if they want access to those programs. The other people that you consider consolidation are those with Parent Plus loans. Now, I know a lot of families have an arrangement where the parent takes out the Parent Plus loan, but the student agrees to make the payments. But most of the lower payment options are going to be based on the parent borrower situation. So a Parent Plus loan is not eligible for any of the income-driven plans. However, there's a loophole where if you consolidate it, it gets access to one of them called income contingent. So that's something for a family to look into if there are Parent Plus loans in the family and they're looking to get a lower payment. Other than that, there's really no value for most people to consolidate these days.
So, for a borrower who does decide to consolidate their loans, what are the next steps? And can you provide some tips to make the process smooth and easy?
The process is pretty darn easy. So, you go to studentaid.gov, you apply online. One thing I would point out is within the promissory note that you're filling out, there's one page of loans I want consolidated and one page of loans I don't want consolidated. If there are loans you don't want consolidated, make extra sure to fill out that second page. Don't just leave them off that first page that I mentioned. Consolidation also gives you the ability to choose your loan servicer of all the ones that work for the Department of Ed. Now, in the near future, that's not going to matter. But for the next year, I suppose, if that was important to you, that's really the only opportunity you have to have servicer choice. So you can go ahead and choose that. The reason I say it's not going to matter and at some point is the Department of Ed is putting together a project where there'll be a single platform. And as far as the consumers are concerned, it's going to be all one servicer. And I guess the only other thing to prep for is you can also choose your repayment plan at that point. You don't have to. And if you don't, they'll just put you on a standard plan where your payment's the same for however many years the consolidation is. But if you know you're going to need a lower payment plan, do your research ahead of time. So while you're filling out the application, you can make that choice too.
Great. So if you have both private and federal student loans, can you consolidate them together?
Yes, but now ask me if it's a good idea.
Is it a good idea?
No. So you can't consolidate private loans into the federal loan program. So the only way to do it is the other way, is to refinance your federal loans into the private loan program. And as I have mentioned at other times that we've talked, that's almost always a terrible idea, because by doing that, you lose all the protections that are unique to federal student loans that aren't available for private, such as the lower payment options, forgiveness programs, or if something really bad happens, federal loans have discharges. If you become disabled, God forbid, you pass away, generally there's a lot of times those discharges aren't available on private loans than they are on federal. And you can't, there's no takes backsies. Once you do it, you can't reverse it.
Great. So are there any potential repercussions to consolidating student loans? Could the decision come back to bite students in any way?
Yeah, there's a couple. So if you're pursuing an income-driven plan, even on those old FFEL loans, they're eligible for that, the original income-driven plan, which is IBR, income-based repayment. When you consolidate, all your past history gets wiped away. So let's say you were 10 years into an income-driven plan and, after 20 or 25 years, the balance is forgiven. If you consolidate, that 10-year history goes away and you're going to have to pay for the full 20 or 25 years. Same for I see this all the time for public service loan forgiveness, and it breaks my heart because, again, you can't reverse it. If you're pursuing public service loan forgiveness and you already have some eligible payments under your belt, if you consolidate, it wipes all those payments away and you cannot reverse it. The last potential repercussion is a little more subtle. Overall, whether you consolidate or refinance or not, the name of the game when it comes to student loans is paying the least amount over time. And unless you're pursuing a loan forgiveness program in some way, the way to pay the least amount over time is to pay the loan off as quick as you can. Interest accrues on a daily basis off of whatever the outstanding balance is. And some people don't realize until late, they wake up one day and go, wait a minute, I've been paying my student loans for 15 years. I've got to be almost done. And they look and go, oh my goodness, I still have 15 years left. Why is that? And it's because you extended the term of the loan. So you can always pay extra. There's never a prepayment penalty. I always advise people, regardless of what they're doing with their student loans, to reevaluate their student loan strategy every year. Tax time is a great time to do it. So that will help prevent the sort of interest creep that can happen if you consolidate and take the full 30 years to repay the loan.
Great. So do you have any additional tips or pieces of information that you would like to add that I may have skipped over?
When it comes to federal loan consolidation, it's pretty straightforward. I guess the last thing that I would mention is that the way they book the loans can look a little confusing. So for federal loans, there's subsidized loans, which don't accrue interest while you're in school, grace period, or deferment in most cases. And there's also subsidies available under the income-driven plans. And then there's unsubsidized loans that accrue interest right from day one and accrue interest every single day until the loan's paid off. The nice thing about consolidation, which is actually wasn't always the case, is that when you consolidate, you maintain those subsidies. So let's say half your loans were subsidized and half were unsubsidized. If you go in deferment or whatever, something that's a subsidy eligible event, they're going to maintain the subsidy for that portion of the consolidation loan. Well, the only way they can do that accurately is on the books, separate the loan into two pieces. And so borrowers think they have two loans. Legally, they don't. If you look at your credit report, it's going to be one loan. If anything ever came up legally, it would be one loan. But if you look at the servicer's website or your bill or anything else, even your repayment history, it's going to look like two loans. So it's good for people to understand that it isn't really two loans.
Great. Well, thanks, Betsy, for joining us today.
Yeah, thanks for having me.
If you like this video, please give it a thumbs up. And for more interviews like this, please subscribe. Have a great day, everyone.